All right, everyone, welcome back. And in this video, we're going to be looking at the Chapter 3 um, homework questions here, the Excel questions, the DQ, QS, all these extra tabs behind the practice with feedback. And yeah, so let's get started. All right, let's start with the discussion question here. Again, I have a couple things I always do in these just to clean it up for my preference for an Excel. I'm going to remove the grid lines. Just makes it a little cleaner, I think. For some reason, this has a formatting on this little spot. Not sure what that is, but I'm taking that off. And then I'm going to insert a couple rows here, probably between each question, just to answer. We'll see how much space we need, but for me, that feels better there. And then I'm going to put a text box in underneath the question here to input my answer. Okay, so in our discussion question here, what is the main factor for a company in choosing between job order costing versus process? And really the main factor to consider is whether the production will be customized or standardized, I guess is another way to say. Custom orders would best work with a job order costing system, and standardized production would work best with the process cost system. And really what it comes down to, the reason, I guess, below that, these choices would be made in order to maximize accuracy and efficiency in the costing process. So it's not a necessity that we have to choose one or the other. It's not like US GAAP like you had in accounting 2 where we have to use a certain, methodology depending on the type of production or something like that. It really comes down to our choice as a, managerial accountant. And that's just typically these processes are tied to these types of systems because they make more sense, right? So let's see. Okay. And then give 2 likely applications of each system. Let's say 2 likely applications of job order costing could be customized invitations, customized invitation printing. I know that was one we looked at in Chapter 2 on the lecture video, where you've got unique orders depending on what the customer's requests are. And let's say another one would be another good example. Custom home building, very much built in accordance with the home buyer's specifications, right? And then process costing application companies would, I'll say company examples would be cereal. So it's so standardized, right? All the stuff, beer, lots of food production type things are very similar. Baking, we talked about baking a lot in the problems in the chapters. So cookie production, etc. I know that's 3, but just a few examples there. I'm going to put in a few more rows there, kind of clean this thing up, make it look good. Okay, then delete a couple rows just to make the size fit well. Okay, what purposes does a process cost summary, also called a process cost report, solve? Okay, let's insert a text box again. So what purpose does this serve? So let's say a product cost report, we'll just use that version of the name, calculates the number of units and associated costs transferred to the next department / step in the production cycle. It also calculates the number of units and costs associated with WIP in the inventory in that department or step of the production cycle, or I'll just say / step in the production cycle. The information can be used to monitor departmental performance and control costs, and set pricing for products. Because if you know what the individual unit, cost is for a finished good, for example, that's important information to have, because then you are going to be setting your price for that product at some higher amount in order to make profit, right? It's kind of the thing there. So, okay, explain why equivalent units of production for both direct labor and overhead can be the same as, and why they can be different from equivalent units for direct materials. Okie doke, let's go put a text box in here. And let's see, equivalent units of production. And okay, so let me read that one more time. So explain why equivalent units of production for both direct labor and overhead can be the same as, and why they can be different from the direct materials. So really what this comes down to, the differences in, I'll call it EUP, in DL, OH, and DM result from timing differences related to the application / usage of direct materials as compared to direct labor and overhead. We could say equivalent units of production are the same when all inputs to production, let's call direct materials, direct labor, overhead, are added simultaneously, but they will differ when these inputs are added at different stages of the production process. So hopefully that makes sense. If you put all the materials in right away, but then you've got other parts of labor head as you go further down the line, then that's where you're going to see those changes in the equivalent units of production, because some of the labor, for example, could be, cost of labor could be being added in, later on as you get down the production cycle. And let's see. Yeah, and then I guess one thing to note on here is that we can see that DL and OH, equivalent units of production, are the same when overhead costs are applied based on direct labor. So remember that's using our predetermined overhead rate application methodology. And that I touched on that in the last video, but the labor and overhead piece, when it comes to the equivalent units of production, will be the same if we're using if we're connecting them together through that predetermined overhead rate. That's not to say the costs are the same, because we're applying the overhead at some percentage of direct labor, but the equivalent units of production will be the same. So if a WIP is 60% completed, then you're going to have 60% of the equivalent unit production, equivalent units of production, and those will be the same for direct labor and overhead. But then the amounts that get applied to that will be different based on the predetermined overhead rate. So a little tricky. I mean, it sounds more confusing than it is when you go back, or if you've already done the exercises, and when we look at some of the problems here, it'll hopefully make a little more sense just through doing the process. So, okay, is it possible to under or over applied overhead costs in a process costing accounting system? Yes, we are using a predetermined overhead rate allocation methodology. And when using this methodology, there will be a variance between the actual overhead incurred and the overhead applied using the predetermined overhead rate. This is the same whether using job cost accounting, spelling off there, look, or process cost accounting. So no real difference there. We're still using predetermined overhead rate applied at some percentage of a base, a factor. You know, we use direct labor dollars a lot just because that one's pretty easy for the problem and stuff. And I think it's a realistic metric, a factor. But you can also, like we looked at in chapter 2, use other things like machine hours or direct labor hours and stuff. So, okay, let's insert another text box, and this will be our final discussion question answer. So number 5, explain why it is possible for direct labor in process operations to include the labor of employees who do not work directly on products. Hint, are we looking at products or processes? Okay, so this kind of gets to the it sort of gets to the difference between the job costing and the process costing. And remember that the what do we call this? The cost object isn't the product per se, but rather the process. And if the labor of that employee, even though they're not working directly on the product, they are working directly as part of an individual process. And if you remember back to chapter 2, we kind of had that subsidiary report with the different categories of the jobs that we were working on. Here we have just the processes as the direct cost object instead of the individual jobs. So let's see. What do I want to add on here? So that's kind of the overall thing. Like I said, since the process is the cost object, even if an employee is doing indirect labor, factory janitor, for example, or factory supervisor, then and again, this would be someone who works only factory supervisor, the employee only working within one department at the factory. And so what did I say? So yeah, since the process is the cost object, not maybe I'll add not the individual job, then even if an employee is doing indirect labor, that employee's labor costs are a direct cost to the process that their department performs, essentially. And therefore, that labor is considered direct to the process, not indirect. So a little bit confusing, but I think thinking about this in terms of the cost object is valuable. And remember what we're looking at in terms of job costing being the individual job versus the product or process costing, I should say, being the process. And if they're a part of that process, then they are directly tied into that process, since we're not looking at it as a specific job. So just fix a couple little typos. Just as an FYI, if you push F7, it automatically does spell check, by the way. If you all are ever trying to spell check your thing, it's an easy way to do it. Just a good thing to know. Okay, so let's move on to quick study. All right, first thing, I'm going to get rid of the grid lines and give myself a little extra room, insert some rows. Okay, so let's look here at problem, a quick study number 1. So a company's beginning work in process consists of 20,000 units, 1/5 complete, so 20% complete with respect to direct labor. These beginning units were completed during the month. Another 90,000 were started. And of those 90,000 started, 60,000 were finished, and the remaining 30,000 were 1/3 complete at the end of the period. Assume that 1/3 complete applies to materials, labor, and overhead in this problem. Calculate the equivalent units of production, and be sure to show your work. You can copy and paste in a portion of the production cost report if it helps you. Yeah, I'm gonna go ahead and do that because I think it is helpful. So let's go ahead and let's see here, I'm going to copy this down to here. So this is on the production cost tab. You can go over, see if I've got enough room. Oh yeah, that looks funky, but let's then click here. So I'm clicking at the side of the cells just to give us some extra room. I just like to kind of clean these up a little bit, merge these. So let's see, we've got all that kind of put together. Okay, I think that'll work. Okay, so work in process, so units to be accounted for. Work in process beginning, it's told us here that we had 20,000 units, so we'll go ahead and put that 20,000 in. And let's put our number of units started into production. It tells us that was 90,000 that were started. So our total units during the month, we'll just add those together, gives us 110,000 total. Okay, and now we want to do kind of a reconciliation down here below. And we're going to say of those 90,000 units started, 60,000 were completed. And then, let's see, what does it tell us? Oh, it tells us the ending. So it tells us ending somewhere in here. Where does it go? 30,000. The remaining 30,000 were 1/3 complete at the end of the period, essentially. So we've got 30,000 in the ending work in process. And it tells us up above, we started with 20,000, but all of those units were completed during the month. So the only thing that's remaining at the end of the month is these 30,000 units, essentially. So then we've got the difference. We just do a little math here. So 110,000 total units, 30,000 still in ending WIP. And then we can just reconcile those so that you see that there. That's equivalent, 110, 110. So that tells us that we've accounted for all the units. And now, sorry, I was just aligning those. Sometimes maybe it's just my OCD, but I like to have some real nice, clean reports here. So sometimes I like to make it look good, right? Okay. So let's look at the totals here. So we had amounts transferred out. So remember that when we're talking about amounts transferred out, those are going to be 100% complete always, right? Those are the things that are done. They're finished. That's why they're being transferred out, is because they are finished with this whole step in the production cycle. But it tells us above that it's 1/3 of the, they were 1/3 complete at the end of the period. So for our equivalent units of production here, we're going to times that, or we're going to divide it by 3. And this will be the same. It says it's the same for materials, labor, and overhead in that process. And then we are going, and it says, okay, calculate the equivalent units of production and be sure to show your work. So we'll just add those together. Clean this up just a little bit. And you can see that our equivalent units of production down here are 90,000 essentially, right? So if we go back, this one kind of showed it as well. So transferred in this instance, it would have been here. This problem showed us that if you watch the video here, we've got transferred out, and then we've got different percentages of completion for the various categories of cost related to the WIP. 100% was that one, and then 60% for labor and manufacturing overhead. But in this instance, here, it's a 1/3 of the actual total units that are being produced. The physical units are actually equivalent units of production. They're only 1/3 finished. Okay. So that is the solution there, 90,000. So let's go on to question number 2. Okay, explain a hybrid costing system. Identify a product or service that might fit well with a hybrid costing system. So a little bit different. Let's insert a text box here. So hybrid costing system features both, includes features of both the process and the job costing. So there might be, it would work well for a production. Let's just write this in. So a hybrid costing system includes features of both process and job order costing. So you want to think about some manufacturer that has parts of their production cycle that are very standardized, but then there are parts of their production and manufacturing cycle that are very customized, basically. So some examples of that in our solutions here, it talks about a computer producer that maybe is making hardware that's all the same, but then it's got customized software. That could possibly be a good example. Let me think of some other ones. Some businesses too could make both custom things and then make very standardized things as well. So not even that they had to be different parts of the production process, but the company just might make some one-off type customized types of things essentially. So a couple different examples here. I was just looking up companies that produce both custom vehicles and mass-produced models. Producers of, like we said, consumer electronics have certain parts of their products that are mass produced, but then some special orders or custom designs. Furniture manufacturers that make custom furniture and standardized furniture. Clothing manufacturers that make custom clothing, tailored suits, for example, alongside just ready to go, ready to wear apparel that's not custom fit. Construction and building materials. So companies that manufacture both standard products like brick or cement and then custom products for specialized types of construction. Some food and beverage manufacturers. So if manufacturers produce large quantities of standardized food products, they might have some custom or small batch products that they make as well. And medical device manufacturers. So this one talks about production of standardized medical equipment like thermometers, stethoscopes, etc. But then it could also have custom medical devices like implants or prosthetics, that are unique to the specific patient, essentially. And businesses might want to operate in this way. It opens up just different lines of business, and maybe you attract certain types of customers and build your business out. So lots of different examples there. I'll let you all fill out the rest of this question, but hopefully that gives you the kind of food for thought that you need to finish this one. So, all right, we're on to the EX tab here for our exercise. And again, I like to clean this up a little bit. It helps me read easier without this grid lines on there. Okay, so in this problem, it tells us that we have NorCal lumber and we're producing bagged bark for use in landscaping. Production involves packaging bark chips in plastic bags in a bagging department. And the following information describes production operations in October. Okay, so we've got direct materials used, direct labor costs, and then predetermined overhead rate based on direct labor is 180%. And then we transferred out $407,000 in costs from bagging to finished goods. And then we've got a note down here that tells us that this is reflecting back to the work you've been doing in the last two chapters. The company's revenue for the month totaled $850,000 for credit sales. Cost of goods sold was $500,000. And we want to prepare summary journal entries dated October 31st to record its October production activities for direct material usage, direct labor usage, overhead allocation, goods transfer from production to finished goods, and 5, sales. So, and then remember that sales is a 2-part entry. So really kind of harkens back here to the work we were doing in the last video where I explained, a lot of this, just kind of the journals for production essentially overall. So let's go ahead and do some entries though for these things. So the first thing I want to do, I'm going to create a general journal, basically is what I want to do. So I'm going to put date there. Then I'm going to give myself 1, 2, 3, 4, 5 columns, and I'm going to hit merge and center. I actually don't want it centered. Well, do I want it centered? Yeah, I'll leave it centered up here. We won't want it centered when we put in our journal entries, but I'm going to put account / explanation. And then we'll put debit and credits, DRCR. And then for these ones, I'm going to move those over to the right side. And then I'm going to go ahead and highlight everything and make borders on it all. And so that's why I merged this too, because we want these all to be, merged together. So our explanation line is just one. We could have done that differently by stretching out one of these cells, but let's just roll with this. And I think I can just, I'm going to go ahead and drag this down. So just give myself some space there. And I'm going to delete out. I don't want those are just the headers. Okay. And then I'm going to bold those for the heck of it. Okay. Now we've got ourselves a little general journal essentially that we've made here in our spreadsheet. And like we said, everything is being recorded on 10/31. let's just say 2025. Put the year in, and then we'll say 10. Actually, you know, I like doing it with text. October 31. Centered. I'm going to use this format painting tool here just to format all of these the same way. So when we type in anywhere below, it'll just automatically be in text format and centered. So we don't have to putz around with the formatting. Right. And okay, so we just want to go through, like we said here, we're just recording everything on 1031. Remember that, like when we look back at this problem, in reality, these things are probably happening more so kind of throughout the process, but some of this is happening at the end of the month as we are recording the movement and doing our production cost report, etc. But we're just going to assume here everything's on 1031 and all of our, or at least all our journal entries. Okay, so direct materials usage will be our first journal entry. And in this journal entry here, we just have to go up and say, okay, we used 525,000 of direct materials used. And so again, that's going to be, what do we call it? I'm looking back, I'm curious. Some raw materials. That was a purchase of raw materials, right? And then here's our, raw materials inventory going into WIP in these different categories in the different stages of the production. But here we don't really have stages of, there's just the one cycle. I think we just have sort of production involves packaging bark chips and plastic bags and then them being sold. So we really just have the one work in process inventory. So we don't, I'm gonna align that there, and then I'm gonna do 2 indents. I'll wait to do that once we type in here. I'll show you. So 525. Whoop. And again, let's do some formatting here. So let's put these in with the accounting. We don't care about the decimals. And then that works. Okay, so we don't have an individual department we're putting this into like we did back in the practice with feedback. Here we said mixing, packaging, etc. Mixing, baking, packaging, so on and so forth. In this problem, we really just have the one WIP, so we don't need to specifically identify which department or step in the cycle it's going to. And then raw materials inventory will be our credit. And so remember, credits get indented. So I'm going to hit my little indent button twice there. And then we're going to put a little explanation in. I'm going to italicize that and align it over to the side. So clicking that aligns it over. And we'll say direct materials used in production. So remember, this is taking it out of the raw materials inventory and putting it into production. Okay, then I'm just going to copy that whole journal entry, come down. A couple of reasons. We got October 31st is the same day for all the journal entries we're doing. So on, and we want all basically the same, except for the sales, which we could just record that in 2 separate pieces. So they're all 2-line journal entries, not 4 lines or anything. Okay, and now we're going to look for number 2. We want direct labor usage. So direct labor was 76,000. So yeah, we already have that. That's good. We want the same account, work in process, 76,000. Factory payroll expense, 76,000. We even linked this, so it just automatically updated. So that was handy. And we'll say direct labor. But, whoa, did not spell that right. Okay, that was number 2, overhead allocation. So now we're going to do remember our manufacturing overhead. Manufacturing overhead goes on the credit side for our allocation. And then again, still work in process inventory is the same. And we're going to say, whoops. Oh my gosh. Okay. Overhead allocation, and I'll put the I'll put that just in our explanations here, 180% of direct labor, DL. So then we can just go here, multiplied by 1.8, which is 180%, and I get 136,800. Okay, so again, we're just kind of more so doing, honestly, like what we learned chapter 2 in this problem. There's not quite as much of the process cost forms, but we'll look at that in the next problem. So okay, so now we've got movement into finished goods inventory, I think, is our next goods. Yeah, goods transferred from production into finished goods. So I'm just going to go equals that. That'll just pull that down, and then I'm going to go copy, paste values. Just a little easier than retyping that out. So pasting values, because alternatively it would be a formula still, and if you change this, it would change that, but we just want that to stay regardless of what we put in the debit spot. And what we want to put in the debit spot is finished goods inventory. And we transferred out $407,000 of materials, of products into finished goods. And we'll say transfer to finished goods. I mean, pretty straightforward. Okay, now we can either do this in a 4-line journal entry, but like I mentioned before, I'm just gonna do our sales entry in 2 separate journal entries. We'll just say sales on credit, as it told us. That's how the sales were made. And then record cost of goods sold, COGS. We don't want these accounts. We want accounts receivable, remember, because we're sold on credit, so that's going to be account, not cash, right? And then we've got cost of goods sold is our expense account related to the sale of the finished goods, and finished goods is going down, so I'm just going to link up there, save myself some typing. And what does it tell us here? Our sales were, I think it told us $850,000, and our cost of goods sold was $500,000. Okay. Yeah, and that's pretty much everything we're doing in this problem. Again, it's not very unique to the process costing, but I like circling back on this to keep in mind, journal entries, what we're doing, and all that kind of stuff. So one little thing to note here, keep in mind, so our sales minus our cost of goods sold is $350,000, and our gross profit margin, then, if we take our net sales divided by gross sales, 41%. So that's a pretty good markup, I think, 40%. So I'd take that. If you could keep getting it, that's good money there. Okie dokie. So, and that wasn't part of the problem. I was just curious, for looking at, that's kind of the analytical part of management accounting. This is more the bookkeeping piece, right? Okay, so let's move on to our PR, our problem. Again, no grid lines for me. We'll clean up here. This is just me wanting things to be tidy. And let's look at our instructions. So Chico Company produces products through a single processing department. Okay, so we just have one processing department. So we're not going to be transferring it, department to department. It's just going to be in process, and then it's going to go into finished goods when we're done doing the processing. But it is more of a process. It's not a unique, custom production environment. So we're going to be doing process costing. And you can see down here, we've got our production cost report, etc. 100%, all our direct materials are added at the beginning. Direct labor and overhead are added to the product evenly throughout. We use monthly reporting periods for weighted average process cost accounting, which is what we've been doing. Following is the general ledger account detail for November, showing entries that were made for the work in process account. And remember, debits to WIP are the same as costs added during the time period. So this is just kind of showing us sort of in a journal entry format, which is good to see. And just to understand, WIP, it's an inventory account. Here's our ledger, and here's our explanations, descriptions of what's going on, and then all debits. We had a beginning balance of $40,600, and then in November we had additions in for our cost categories of these amounts. And so, and I think we're doing November. I'm pretty sure. Let me just make sure I'm not crazy. Yeah. Okay. So this is going to tell us what the costs that were added specifically were. And then it tells us a little bit of additional information. So 5,000 units of beginning goods in process consisted of, and let's look at this. So 14,000 of direct materials, 19,000 direct labor, and 7,600 of factory labor. If we add those all up, it comes out to 40,600. You can see down here, and that's our beginning balance here. So, just tying those things together. Keep in mind, the totals in WIP have subsidiary kind of cost sources below them. And I guess it tells us right now, makes up the 40,600 balance. During November, the company finished and transferred 60,000 units of production of its product to finished goods. And at the end of the month, the goods in process inventory consisted of 6,000 units that were 100% with to complete on materials, but only 25% with labor and overhead. Okay. So and we got 3 things we need to do. Step 1, we need to prepare the company's cost summary for November using the weighted average method. See our report below. It's funny that I had to stretch these out, these rows a little bit to be able to see what's happening here. And then prepare the journal entry dated November 30 to transfer the costs of completed units to finished goods, and then record the sale of those products, kind of like what we did in the last part of the problem. I'm just being picky on my Excel. Okay, so, and here's a little hint. Your cost of goods transferred should be $396,000. Okay, so we've got a little check figure for us to work with. And let's get started. All right, so we've got our whole production cost report down here, which is good. And then let's take a look and do our initial reconciliation up here at the top. And so we got to look back and see what it tells us. So we had 5,000 units of beginning goods. It tells us right here. I think that's the only spot it tells us. But yeah, 5,000 units beginning. We finished and transferred 60,000 of units of its products to finished goods. So we've got, okay, wait, let's look at this here. So work in process ending, did it tell us what the ending was? At the end of the month? 6,000 units. Okay, so 6,000 ending, 60,000 transferred out. So we add those together to get 66,000. And then we can kind of sort of back into the amount that was started in production because it's got to be the difference. So 61,000 units started into production. It didn't tell us that. We had to sort of back into that, but that's part of the little puzzle of figuring these problems out. So that's great. Okay, and then remember, everything that's transferred out, right, is 100% complete in terms of units. It wouldn't be transferring out if it wasn't complete. And then the finished, the ending balance WIP stuff is, what did it say? 100% with materials, I think, and it was 25% times 0.25 in regard to labor and overhead. Okay. Again, just being picky, but it's okay. you don't have to do this, but it just makes my brain feel better when things are nice and organized in the way that I like, I guess I would say. Okay, so anyway, on to the problem. one little thing is bugging me. Okay, that looks cleaner. Okay, so now we've got our equivalent units of production down here, and we can see materials is the full amount, but we have a partial for the labor and overhead because it told us above that the stuff in the ending, sitting in ending WIP was only 25% completed. Okay, so great, we got all that going. Now let's look at our costs here. So our total, our beginning WIP costs, or it told us, I don't know if I can link to it. It told us it consists of 14,000 of direct of materials, 19,000 of labor, and 7,600 of factory overhead. We can sum these up. And one thing that I think I'm going to do is I'm going to put this into currency format so that we can differentiate between units and dollars, right? That's kind of important. So let's put that formatting in. Okay, and then cost added during the month. It tells us above, we put in materials. We can link these ones because they're in individual cells. So there's the labor, applied overhead. Again, that's the applied stuff. Let's drag down our formula. And then I'm going to just highlight all those, click my format painter, and then paint over those cells to put them all in the same formatting with the dollars. And then we're just adding together, so we can just auto sum, drag that across. One more time with the auto sum, or sorry, the format painter. So now we've got that. Okay, so let's see, what do we need to be looking at? So our total cost, we've got it all together. It's yeah, that's funny. So then, sorry, we're looking at the total units. The units are the same as the cost down here. So I think it is valuable kind of to have the, putting the dollars on. It helps you differentiate between what's a unit number versus what's a cost, right? Because that's kind of important. And so it's especially important, like I was laughing to myself about, because if the cost, if it's exactly $1, then it can be a little confusing if you didn't have a dollar sign on there. So, and what we want is a cost here. So we're taking our cost divided by the number of units, $1. Let's drag this across, and then I'll do this here. Oh, and let's move that out 2 spots. And then that's not the same formula. Let's copy this one. Oh, geez. Okay, this is not working well. Auto sum, that's what I want. And let's push it out a couple spots so we can see our decimals. And yeah, so like I said, $1 unit cost exactly makes the total cost of the equivalent units the same thing. It can be a little confusing if you don't identify what's a dollar and what's a unit. So that's why we format things. Okay, and then let's see. Just for the sake of being picky, I'm going to put a little double underline. And then, okay, let's do our cost reconciliation here. So at the bottom, then, we're going to be accounting for the cost transferred out. So here we can see these amounts above. And so when we're doing our cost transferred out, how we want to do this, we want to take our unit costs times the total units transferred out here, right? So this is and these are going to be costs. Let's format paint this, and then it'll save that formatting as we go. And then let's auto sum. So $396,000 of cost was transferred out based on these unit costs, essentially. And then we've got costs in WIP that are going to be a little bit different. We've got to do our calculations here. And how much, first, like how many units are in WIP? Oh, okay, this is 6,000, and we've got unit cost from a materials perspective of 6,000 again. Again, confusing because it's 1 for 1. I'm going to paste that in down here and then change the calculation spots just because I want the formatting to save. So then again, we've got 6,000, but we're arriving at that with $4 times 1,500. So it's the same dollar amount, but this is 1 times 6,000, $1 times 6,000 units. This is $4 per unit times 1,500 units, just happens to be the same amount. And then again, I'm going to copy this down. 1,500 units again for overhead, but it's $1.60 per unit related to overhead. Okay, so then I'm just going to copy this formula, paste it down. This is just pulling over summations, so it's not too interesting there necessarily, but we'll add these all together. Oh, that looks a little clunky to me. Let's just, yeah, double underlines in the formatting there, so that looks good. And the total costs to have accounted for is 410,400, as you can see there. And then we can kind of compare those two things, and you can see that we reconcile to the dollar, and we are looking good. Okay, let's see. So we prepared our cost summary report. Then we need to prepare the journal entry on November 30th to transfer the cost of the completed units to finished goods and record sale. Yada, yada, yada. So let's do some, wait, what did it ask us? Okay. Yeah, we just need to prepare the journal entries essentially. So good to go. And then I'm going to go back to our lab because we had this nice little general journal here. I'm just going to, we don't need as big of a journal, I don't think, for this one. So I'm just going to, oh, that was kind of wonky, but that's okay. Better than nothing. What is the date? Oh, okay. What's the date here? November 30th. Okay. So then we're going to say November 30. I think it has us do a, there's no such thing as November 39th. It has us do a sale here. So we'll, I think we can, oh yeah, I should have, well, maybe we can just go back and steal it here from, let's take this portion, paste that in here, because the sales, oh, excuse me, the accounts are going to be they're going to be the same for our journal entry there, basically. Oh, you know what? Did I make a mistake? Now as I'm looking at that, I just saw a mistake. Oh no, I didn't make a mistake. Here's the problem. There's a formula, and when I pasted this over, it is putting in it's pulling from the same spot above, but it doesn't work anymore because we kind of played with around with this. So I'm going to link that instead, keep the finished goods inventory there. And I'm just going to copy and paste values to break the link and just have that be in there. Okay. So we are going to be transferring a certain amount. Our journal entry is going to be transferring from WIP. So I'm going to paste values, copy, paste values. It keeps the indentation, which is kind of nice. And then that's going to finished. Or here, let's do this. Copy, paste values. Again, it'll save our, it won't indent now if you just paste values instead of just directly pasting. This is transfer to finished goods. And we transferred, how much did we transfer? Okay, we can see here, right? We transferred 369,800. Remember, that's our hint. Wait, what did I do something wrong? 300. Oh, I'm sorry. No, my bad. We transferred 396,000. Cost added were 369,800. So in other words, whatever the difference between these is, it looks really similar. 396 versus 369. So 26,200. that's all gone, right? And then, or some portion of that, I guess, is probably left. It depends on where the production came from. But the total amount transferred out was at 369,000, and that's what it told us up there. Let's just link this then. We've already got our links there, so that's awesome. And then, okay, we had a sale for 650,000. It tells us there. And again, I could just link above. So it went to finished goods. We applied, we did all our costing, and then we sold it. So good for us. Again, not required, but I'm just curious to check our profit margin. So we had 254,000 of gross our profit, net profit, and gross sales of 650,000. So about 40% profit margin. So pretty good. That's pretty good. What is this business? I don't know. Did it even tell us what this was? I don't know. It even tells us what we're selling, but oh well, that's okay. Whatever it was, we're making a healthy profit on it, so good for us. And I think that's everything. Oh, our journal entry, actually, our explanation still, because we copied those over from the same type of journal entry, made sense. So that's something in accounting. I'm not saying you should, always look for a shortcut, but that is one way to be efficient, is to understand Excel, understand how you could copy and paste things in, or have some. Sorry, as I was saying, my video got cut off there, but in Excel and just in a working environment, and for your own sanity and efficiency and quickness, having either templates or processes like, having, like in this instance, we copied over the comparable journal entries, and those journal entries already had explanations. They had the right accounts that were already, put in. We only had to tweak a small amount, just change the numbers to make it work. So those kind of things are important. That's just efficiency essentially. And it might seem like a small thing because you're like, oh, you could just type this in, but when you're an accountant, and if you're trying to squeeze every last bit of efficiency out, you'll want to find things like that just to make your life easier overall. And little things add up too, and they really do make your life and the process more efficient overall as an accountant. So just something to keep in mind. All right, let's move on to the final question here. Beyond the numbers. So these are cool questions. This one says, take a few minutes, think about process costing versus job costing. Now pretend that you are trying to discuss this with someone who is not an accountant. Describe the important role the production cost report plays in process costing, and also explain in simple terms the notion of equivalent units of production. Why is it necessary to have this calculated, and what does it do for the accounting process? So I don't know if I'm going to write this out specifically. I'll let you all kind of write it out. But as I think about this, and again, we're the process costing versus job costing. The process costing is being done because of the standardized, non-customized nature of the production process that will benefit from using process costing, right? It would be very difficult to somehow, allocate or impossible, right, to individual production, the different types of costs like we can with the job order costing. And what we want to come up with is some way to derive a cost per unit, right? And that's really important because we need to know the cost per unit so that we can set the price per unit and still have, and have a profitable product essentially, so that when we're selling these things on a, one by one basis, we just don't have a way to allocate the cost in a customized manner like we do with the job costing in a customized environment. And so we use this concept of the equivalent units, and that allows us to essentially convert the idea of partially completed units into a measure of fully completed units. So if we say, a fully completed unit, there's 6,000 of those. We've got 6,000 batches or whatever being produced, like we had in one of our problems previously. And then we can say an equivalent unit that's 50% done, for example, or 30% done. Then we can convert that total of 6,000 down to 3,000 if we're saying it's 50% completed, essentially. And then we can allocate that cost to that half completed product in order to show that all the costs that we've incurred so far have gone into producing half of this much of what they're going to be when they're finished, right? Because we're going to keep having to put more cost into that until it gets to the finished production. So this allows us to say, if we were to kind of change these partially completed to thinking of them as full equivalently completed units, then the cost that we've incurred up to that point, this is what we expect a completed unit of production to cost when it's done, essentially, if costs are, relatively consistent going forward. Let's see, what else can we touch on here? Yeah. So I think that really kind of hits right. We want to be able to take all our costs and come up with. This allows us to continuously assess what the cost of the units are going to be, and that might change, throughout the year or years as prices go up or prices go. Mostly they go up. It may prices go down sometimes or something, and it also allows us to analyze equivalent units of production. We could look at this as we're going through these batches, and we could analyze it as a management account and say, wait a minute, why last month was a cost per unit, $1, and now it's $5. Like things like that are able to pop out quicker, so you can analyze the production process and look for inefficiencies or, errors or who knows, whatever maybe there was a big issue with production or something, or new hires that are slowing the process down, or maybe training needs to be done, or whatever it is, the answer. But by having these calculations done, it'll give you the trigger to do that kind of analysis. So not only just costing and what you're going to charge your customer, but also allowing you as the manager, the accounting manager and the CFO maybe, or the production, probably more so like the cost accountant, to look at the overall production process and figure out how the costs are kind of shifting and when you might need to raise prices in order to account for increasing costs, essentially. And then that's done in concurrence with, marketing and sales, and looking at sales forecasts and talking with, the CFO, if you're the cost accountant, and he's talking with the CEO. Maybe you're talking with the CEO too, and he or she, and just doing all this work to make sure that the price that we're charging for our products are reasonable and they're being controlled, essentially. And it allows you to do further planning too, because you could anticipate future cash flow and things of that nature. If you're planning to pay out bonuses, you want to have a forecast of what you're going to be earning in the future, and that earnings are based on some forecasted cost of production. So for all those reasons, I'll let you all take what I'm saying here. Hopefully that's helpful, and insert a text box and give your own version of that answer. But I think hopefully I gave you some good food for thought there, and if you can sort of take what I was saying and convert that down into an equivalent unit of answer, then you can go ahead and put that in. So thanks, everybody. Hopefully you're following along. Practicing with the cost report is kind of important. Try to at least get a feel for this and make sure that it makes sense in your mind. It's not too difficult, but it can be a little bit overwhelming at first when you're trying to look through and do all the reconciliations and things like that. So definitely go back, maybe walk through this once or twice. Make sure that you feel comfortable with calculating on your own too. Maybe watch me do it, fill this out, and maybe then go back and kind of practice on your own. And we'll have some more practice problems in class and in other settings as well. So don't worry too much about that. But all right, well, thanks everybody, and hope you all are having a great day, and I'll talk to you soon.